So this is up Chapter 6, Internal Control. So before we get to exactly what internal control is, sometimes it's helpful to have a real-life example of, well, what would be an example of weak versus strong internal controls? Okay, so this is back in the day. My kids are, going to a local high school. Most of them and their friends all had jobs after school at various businesses in this particular town. And it was really great for them because they could just, go from one place to another, and their friend at the coffee shop just slip them a free coffee. And then they go to the other friend at the sandwich shop, and well, maybe they get a little sandwich there. And it was, they didn't have to worry about being hungry after school or anything like that. And then the shop that sold a lot of yogurt, that would literally go out of there in tubs. If there was some kid having a party, there would be tubs of yogurt that would just go walking right out the door, And this was kind of the way things went. It went on for quite a few years. And then Whole Foods came to town, and some of the kids got a job there. One particular kid gets a job there. He's working at the cashier, as a cashier, and one of his friends comes through, and he slides a organic granola bar around the register and to his friend and does not scan it. Within a nanosecond, the manager is there. You're fired. That's it. Okay, so word got around town real fast that you did not walk out of the store or pull this stuff with Whole Foods. Okay, so if you're thinking about this, who's got weak internal controls? Who's got strong internal controls? Well, Whole Foods seems to have a pretty solid set of internal controls, while all the rest of the businesses in town, not so much. I just want to make sure that you know that the kid who got fired ended up being a very fine person, gainfully employed, and totally honest. Yeah, good guy. All right. So, so that's kind of weak versus strong. So now let's get to the internal control system. First of all, it helps to know what is the purpose of it. So the main purposes they kind of all go together. You could say they safeguard assets. You have a system of internal controls that's designed to safeguard assets. Okay, we don't want the yogurt running out of the store. We don't want the sandwiches going around the register. We don't want our inventory walking out. We don't want cash getting stolen. We don't want our equipment being used for the wrong purpose, for personal use, all kinds of stuff. So if you have a solid system of internal controls, it safeguards the assets of your business. The second thing is it helps ensure the accuracy of your accounting records. Because obviously, if all of this stuff is walking out of your store, your inventory, you're understating your sales, you're understating, your cost of goods sold is all goofed up. So your accounting records do not reflect the economic reality of what's going on. It also, a good system of internal control will increase operational efficiency. That's just a fancy way of saying that you're not wasting so much stuff, because obviously as a business owner, if your stuff's walking out the door, it's not making for an efficient operation as far as you're concerned, or probably a profitable one. Okay, the other thing is it ensures compliance with various laws and regulations. If you're understating sales because you're not recording all of this merchandise that's going out the door, you're also understating your sales tax, which the state takes very seriously. Okay, so main purpose, you're going to safeguard assets, ensure the accuracy of your accounting records, operational efficiency, and compliance with your laws and regulations. Okay, so now let's talk a little bit about the components of this, and right here, yeah. And obviously there's notes that go along with all of this that have a lot more detail than right here, and they may be helpful. Yeah. Okay, so the control environment is probably the key thing in any system of internal controls. What does that mean? It means if the top executives of the company are acting like fools and just not keeping track of expenses, they're being really extravagant, that sets the tone for the whole company, as opposed to the top executives that might be running a modest expense account and sort of following the rules themselves. That it sets the expectations that the sort of from top down the rest of the company looks to as an example. Nobody's going to take a big internal control push to get things done right seriously if the top executives are not following or setting a good example. So the control environment, the tone at the top, that's a big one. Another part of coming up with a good system of internal control, you obviously have to assess what risks your particular company, whatever industry it's in, are most susceptible to. If you are a cash-based company, you probably want to focus on cash. A lot of companies are using very little cash. It may be assets, other assets that they have to worry about. It might be the focus is on inventory losses. So you have to do a risk assessment. Where is this company vulnerable, and then how do we address it? And then there's a bunch of control activities. Control activities that you have to come up with. So these would be the policies and the practices to sort of reduce the risk of fraudulent losses to your company. And those we'll look more at what they're calling the principles of internal control. Okay, then part of this whole system is information and communication. It doesn't do any good to have this system if nobody knows about it, and if nobody knows how it works, or who's supposed to be reported to, and all of that good stuff. So you have to gather the information related to your internal control. You've got a system, you have to have a system for communicating that information to the people who need to know about it, both internally and externally. Okay, and then another key thing is it has to be monitored. You have to say, okay, is this working, and have some way to evaluate that. Okay, so the principles of internal control, I'm going to leave you to read them. I'm not going to go over them. They're fairly self-explanatory. And so what I would say is that if you have questions on them, to let me know. And but the book lists off the various principles of regular and independent reviews, technological controls, and so forth. So I'm not going to take up your time here with that. The important thing to keep in mind with this is that no system, no matter how good, is going to be perfect. You need to know the term collusion, because if you've got collusion between two or more employees, they can get around a lot of the internal controls. So it's important to have an understanding of that. The other thing to keep in mind is that for a small business, it's hard to separate out responsibilities and to have have one person do this and one person do that and one person do this if there's not that many people in the company. So that creates some complications for that. Okay, so the other thing to keep in mind overall is that internal control is a process. You don't come up with a plan for your company and then file it. It's a process. It has to be ongoing, it has to be monitored, it has to be updated, and for it to be effective. Okay, so that's internal control. Next we'll take a look more specifically at controlling cash.